Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Tony Dong Jackson. Now let's start today's group discussion. Good evening. First, let's look at today's 2 topics. The first one is about a lack of confidence, which of course refers to last night's consumer confidence data that was released and turned out to be below expectations. The other topic is about excessive confidence. Right now, the person with the most excessive confidence in the world is just one individual, and that's our big president, Donald Trump. So let's take a look at which part his excessive confidence shows up in. And then there's another very important point we need to talk about. We've been talking about sector rotation. What kind of rotation can actually be considered successful? Because as of yesterday, I feel like the flavor of rotation has become even more obvious. Today, let's use this example to explain how to judge whether sector rotation is successful. And then, in the next few segments, if we want rotation to succeed this time, where might the T point be? Alright, so first, let's take a look at this. So, regarding this part about lacking confidence, let's look at these 3 figures below. Consumer confidence for January is 84.5, while the forecast was 91, and the previous value was 94.2. The current conditions index dropped quite a bit, from 123.6 down to 113.7. The expectations index dropped from 74.6 to 65.1. Actually, these numbers look pretty weak, right? The main reason here is that concerns over high prices and sluggish job growth have caused consumer confidence to decline again. This reflects the next 6 months, dropping to the lowest point since last April. The current conditions index has fallen to a 5-year low. On the left side here, or rather below, 2 things are highlighted. One is called difficulty finding a job. This refers to this means that respondents pointed out that if they were to look for another job, it would be relatively difficult to find one. This proportion has actually started to slowly rise. Generally speaking, 20% is a very sensitive threshold. Once it surpasses 20, things tend to get more. This means that the job market is relatively weak. Why is 20% the threshold? Well, it basically means that 1 out of every 5 people feels that it's hard to find a job. This is actually a pretty important indicator when assessing the outlook of the job market. Now, in addition to this, on the right side here, this is the section about expected personal income. You can see here, this refers to the portion of people who expect their income to increase. The proportion of people expecting an increase has dropped to about 15%. So this figure is really quite low. Now, let's talk about this part. Well, of course, this number can't be considered strong. It's actually on the weaker side. But the thing is, there's a bit more in-depth analysis here. People are actually a bit more confident, and the reason is that by early 2026, according to the survey, respondents expressed that war is a major concern. That includes hotspots like Greenland, Iran, and Venezuela, which are all areas people are paying attention to. Now, this is the first point, this concern about war. For Americans, this is actually a reason that doesn't come up very often. And then we also see, because its development was actually quite rapid, it was quickly brought under control. As for Greenland, last week, Trump also pulled back. Now, regarding Iran, I think at this point, it still seems more like posturing and intimidation. There aren't any real signs of an actual attack yet. So, regarding the possibility of war, my assessment here is that by February, things will probably ease up a bit. It's unlikely that the situation will keep dragging on like this. Is consumer spending still showing resilience? Well, the main thing is, there's also the previous big, beautiful bill. There should be some tax rebates coming out from that, and there's an expectation that this will lead to a bit of a rebound. So why do I say this? First, consumer spending remains solid. In the fourth quarter, actual consumer spending was 3, which is a bit lower than the previous quarter's 3.5, so slightly down. Also, this time we've seen that consumer confidence, although it has declined, it's still very important. Let's look at the University of Michigan Consumer Confidence Index. We need to see whether, when it's released at the beginning of next month, it continues to rebound. If it does rebound, then we can pretty much tell. The Conference Board's latest version of the Consumer Confidence Index should also demonstrate a significant and noticeable rebound. In my professional opinion, I personally think the chances of such a rebound occurring are exceptionally high and quite probable, because after watching these numbers for so long, it's really rare to see them cite war as a reason for a drop in consumer confidence. That's honestly very unusual, so this probably won't be a long-term factor. That's why I think a rebound is likely. Now, as for this information, as we wrap up, let's also take a look at some of the other economic data that was released yesterday. The ADP data, the weekly employment change, uses a 4-week average, and it's roughly an increase of 7,750 people. But just take this as a reference, because in the end, as long as when the weekly jobless claims numbers are released, the market's focus usually shifts back to unemployment benefit applications. Okay, and then in addition, the FHA released housing price data. The monthly increase is 0.6%, and the annual increase is 1.9%. But actually, the housing market isn't really the main focus in the US at this stage. It's not really the core of the economy. Another thing that's more important is the Richmond Fed Manufacturing Index and the emergency situation. Previously, we mentioned that the Dallas Index was pretty good, but Richmond is showing a recovery trend. Yes, it's -6, which is lower than the expected -5, so the recovery here seems relatively weak. However, overall, since it also includes statistics from other regional Fed numbers, it looks like the Richmond number won't hinder the overall ISM Manufacturing Index from rebounding. So that's about it for the other economic data. All right, let's quickly move on to the Trump segment. His confidence is a bit over the top. Yesterday, Trump went to Iowa for an event, basically for the U.S. The midterm elections have actually already kicked off, so he went there to campaign and give a speech. During his speech in Iowa, he said, the U.S. will have an excellent new Federal Reserve chair, and he said, I will announce the candidate very soon. Then he said, you will see interest rates drop significantly. Okay, and of course, as we'll see in a moment, he also talked about exchange rates. When he was asked, he mentioned exchange rates. But I want to talk about something else. Let's first look at the part about the Federal Reserve chair. I think his confidence is a bit excessive. Right now, to some extent, he's actually hit a wall in his search for a new Fed chair. Okay, so... And then this week, regarding the Fed, it looks like the market generally believes that they will pause and not cut rates. This is actually a pretty strong consensus. About 1 or 2 weeks ago, the probability of no rate cut this time was already over 90%, so it's basically certain that there won't be a rate cut. Now, what's more important here is the second point. The first is the rotation of voting members, and then there's the backlash from government pressure. At the beginning of 2026, the Fed will be mainly led by doves. This is actually a more serious issue, and it's separate from Trump's personnel appointments. Before we get into the issue of overconfidence, it's worth noting that Trump also has problems in this area. Why is that? Because here, we need to talk about the candidates. Let's look at this first. There's something called Fed speak, which means analyzing the content of their statements to determine whether they're more hawkish or dovish. So, starting from January, you'll see this. I gently move it upward. Okay, so even though its absolute index hasn't reached the higher levels we saw at the end of last year, like in July or August when it went above 10, it's still undoubtedly trending upward. So this still indicates that currently, the hawkish stance of the Federal Open Market Committee is quite evident. Now, secondly, after the FOMC meetings from September 10th to December 10th last year, there were actually some major changes. First, the outlook for the labor market has improved. We can see that the labor market is now in a situation where it's not really declining, but rather in a state where there are neither new hires nor layoffs. In other words, it's a situation of no hiring and no firing, which is quite similar to a stagnant job market. Additionally, the Department of Justice's stance toward Federal Reserve Chairman Powell might also make Powell adopt a more hawkish position. Now, regarding another change in voting positions, let me explain that to everyone. The two most hawkish committee members, because last year, around the fourth quarter, they made some really tough hawkish remarks, are both women. That's Loretta Mester from Cleveland and Lori Logan from Dallas. And it just so happens that these two, the toughest ones, are both going to serve as voting members this year. Now, this also involves the fact that among the voting members, Chair Powell seems likely to lean more hawkish as well. Okay, so the ones who are definitely dubs among them are Michelle Bowman and Lister Waller. As for Jefferson, Barr, and Cook, it seems like they all tend to lean more toward Powell's stance. As for the attitude, the New York Fed's Williams also seems to have shown some softening and changes in his stance recently. But I think if we're just talking about the single meeting in January, he would probably lean toward keeping interest rates unchanged. So, looking at the members, both Mike and Logan are relatively conservative. We especially want to add that the previous statements from Minneapolis were also quite conservative. Also, regarding the Minneapolis average here, it's quite possible that this could be influenced by Goolsby from Chicago, because geographically, Minnesota is just past Chicago, both in the Great Lakes region, and recently, it's also been one of the coldest areas, so it's possible that it could be affected. Now, Goolsby has recently been taking a more hawkish stance in his remarks. As for Philadelphia's Anna Person, she's been making rather hawkish statements, so that's something to watch out for. On the more dovish side, you have people like Boston's Susan Collins, and San Francisco's Mary Daly has already rotated out, so she's not a voting member this year. So the voting members this year are generally more on the hawkish side. As for the regional committees that don't change, I think last time, after the automatic extension was approved, I feel like the chances of making changes now are pretty low. Trump probably doesn't have the momentum right now to replace the presidents of these regional Federal Reserve banks. There's also a key point here. There was a report that caught my eye, which is that the candidate for the Fed chair hasn't been decided yet. The question is whether he'll vote in favor of a rate cut this time. A yes vote would have a significant impact. Whether his chances increase depends on whether he votes in favor this time, but we want to tell everyone about the current environment right now. He might not necessarily vote in favor. Why? Because actually, the potential for future price increases is still quite high. I'll explain this to everyone in a bit. Also, there's a lack of confidence. On the other side, there's an interesting trend being tracked. Trump has issued 4 tariff threats in the past 3 weeks, so let's take a look at some statistics since last year. So, looking at the situation after the tit-for-tat tariff map started to take effect, here's the conclusion. The probability of Trump actually implementing those tariffs is less than 30%. By the way, when I say probability, that's the term commonly used in Hong Kong and mainland China, which is what we mean by chance or likelihood. The probability of his tariffs actually being implemented is less than 40%. It seems more like Trump is using tariffs as a bargaining chip. He usually wants you to comply with his wishes and do what he wants you to do. This is probably the result of the investigation. Of course, we're not just making empty claims here. There's actually been a real statistical analysis done. For example, the not yet imposed category, the highest is 26.5. And impose impact, which means partially implemented, is 2.5. So 26.5 hasn't been implemented yet, and then there's partial implementation. Let's use that as an example. Let me explain this to everyone in reverse chronological order. And partial implementation is 8.2, then full implementation, and those that were withdrawn account for 6.1%, and in the end, only 20.4% were actually confirmed as implemented, which is about 1/5 implementation rate. Then, in the survey, there's also 22.4, and those that were directly withdrawn make up 16.3. So let's take a look. Why do some people laugh at him? Actually, Taco, it's probably because, according to these statistics, it feels like Trump mainly used tariffs to scare you and force you into submission. And this doesn't include the latest tariffs on South Korea. So it really feels like, for Trump, tariffs are just a tool. Also, if we look at the monthly distribution of the numbers, starting from when Trump took office last January up to now, we can actually see that. The higher points are mainly in March and April, so March is quite high, and then July is also relatively high. After that, you can see that the tariffs are gradually being rolled back. So looking at this, the way Trump uses this tool is slowly being figured out by the market. People are starting to sense his tendencies. This actually works against Trump, because if you keep using the same trick over and over, people will start to call you out, and that makes things more troublesome for you. Next. All right, let's take a look. Yesterday, the US dollar index dropped again by 0.85%, falling to 96.217. I want to specifically talk about the issue with the US dollar here. Now, the main thing here, let's first look at the US dollar and US Treasury yields. What's more important is that the US 10-year yield actually went up yesterday, on Tuesday. It rose by 3.18 basis points to 4.2432, and today it continued to climb, reaching 4.2472. I want to talk about where this difference lies. So you see the US dollar is moving this time. The dollar is depreciating. You need to pay special attention to whether US Treasury yields will continue to rise and form an upward trend. If that's the case, it means capital is leaving the US Treasury market. The US stock market might not be affected right away, but if the Treasury market is being adjusted, you need to be very careful, because that means after that, it could possibly spill over and affect the stock market. So you really need to pay attention. Why do I say this? Okay, let's look at the past 2 years. Yesterday it went down and today it's flat. The main thing is, after that event in Iowa, there was a Q&A session where someone asked a question. Because the US dollar has been depreciating pretty sharply lately. So a reporter asked him, "Do you have any thoughts on the dollar's recent depreciation?" He was asked, "Are you worried about it?" He said, "No, I think it's great. Actually, this depreciation is great." Yeah. Then he explained that last year's tariff policy made the market worried. What people are more afraid of is mainly that Trump's policies are unpredictable. Yeah. So there was a situation where capital was leaving the United States, which caused the US dollar to fall into a slump. We need to remember that last year it was tariffs, and this year there are also geopolitical issues. All of these have made the market quite tense. So the depreciation of the US dollar has been pretty significant. Yeah, and we especially need to add one more point here. The US dollar has depreciated significantly. In fact, whenever any country's currency depreciates sharply, it usually faces the following issues. Let's first look at the situation in the US. Inflationary pressure will be higher. Why? Because imported goods become more expensive. Okay, so previously, the increase in tariffs didn't lead to a rise in import prices. The reason for this is, first, that some of the costs were absorbed by certain companies, and secondly, when it comes to raising prices, businesses tend to be more selective. But you have to understand, with exchange rates, tariffs vary depending on the type of goods, so the tariff rates differ. But if it's a matter of currency depreciation, every item is priced in US dollars. If the dollar depreciates, then there's an overall pressure from depreciation, so this impact is bigger. Usually when prices go up, it affects your purchasing power, and it also makes policy decisions more complicated. It increases the complexity. Then there's government debt financing, especially in the US, where the national debt is already sky high, so the pressure to finance that debt is even greater. That's why I mentioned this. Next, you should pay attention to whether US Treasury yields are rising while the dollar is depreciating, because that means Treasury prices are being corrected downward. If the increase is sudden or the rise is very sharp, you need to be extremely cautious, as this will ultimately impact the stock market. Also, political uncertainty is on the rise, especially with the back and forth on tariff policies and interventions that affect the Federal Reserve's independence. Another impact on global markets is that financial market volatility will intensify, and other countries will face greater currency appreciation pressure. For example, the Taiwan dollar surged today, but this appreciation doesn't necessarily mean your stock market will rise at the same time. It's possible that capital is just flowing in for now. It's more like hot money comes in first, and then we'll see what happens. If your market really has good investment targets, then maybe people will buy them and hold on. But at this level, there's a bit of suspicion that it's speculative capital coming in to play the currency. And because currency values are fluctuating, trade tensions will be higher, and of course, asset prices will also fluctuate along with financial prices, so the volatility will intensify. So that's the situation. Should we bring up a point here? As for the US dollar, if it depreciates slowly over the long term, the market might still be able to accept it. But if it drops sharply in the short term, that's definitely not a good thing. Yesterday, Trump might have mentioned this during an interview after his speech. I believe that if he really sees the numbers and the trend later today or whenever, he will probably come out and say something about it. He'll probably feel that this isn't really okay. On another note, let me add some news about commodities. Why? Because when the US dollar weakens, commodities get a boost. Looking at it here, gold and silver have actually gone crazy. They've really gone crazy. First, for gold and silver, Citi released a report projecting that in 3 months, gold could reach 1,500. But their reasoning is that strong buying from the UK and China is expected to continue. Actually, the thing is, we've also received information that besides China, India is also buying. And in addition to that, spot gold has now broken through 5,200. This is really insane. Silver has broken through 110, and spot gold is at 5,200. So, last year, even though you knew these precious metal prices would go up, you really didn't expect the surge to be this fierce. Also, what's a bit worse is the US dollar smile theory, Stephen Jen's theory. There were two Stevens who were both really impressive before. One is Stephen Jen, and the other is Stephen Roach. Both of them are from Morgan Stanley. Stephen Jen is the one who proposed the US dollar smile theory, which is when the economy is either really good or really bad, the US dollar tends to appreciate. On the other hand, in more typical situations, the dollar is relatively weaker. So, according to his theory, and considering his comments, he really is quite knowledgeable. He suggested that Trump's remarks might signal the beginning of a new downward trend for the US dollar. So, that's the situation. Be careful, because when the US dollar's on a downward trend, it can actually get really weak, so we need to remind everyone to pay attention to this. Of course, this is related to the flow of international capital, so please be aware, whether you have investments in US stocks or not, if you have holdings in Taiwan stocks, you'll be affected by this to some extent. Also, Goldman Sachs has a chart. So, regarding this, well, for basic metals, they say the upward trend is facing risks because of end-user demand. Because take copper prices as an example. They've just gone up too much. After reaching $13,000 per metric ton. Wow, it feels like after London broke through the $13,000 per ton mark, buyers started to push back a bit, becoming reluctant to buy. So, we'll have to see whether the demand side can really absorb it or not. Now, they say this is especially obvious in the Chinese market, but I think, foreign analysts always like to pin things on China. Why is that? Actually, this time, the driving force behind the price surge is coming from Europe and the US because their inventories are too low. They want to develop infrastructure and military industries, as well as expand their power sectors, so that's what's pushing copper prices up. Now, let's look at it from this angle. Coming back to this point, when the US dollar weakens, since all commodities are priced in dollars, a weaker dollar makes sellers feel like their profits are being eroded. Naturally, this gives them the tendency to raise prices. So you need to pay attention here. What's important is whether end-user demand can actually keep up or not. Also, Goldman Sachs released another report saying that the current market optimism is relatively high. It's at this 98%, which is quite a high level. It's a pretty elevated position. But even so, they're still very optimistic about stock returns. Right now, in this kind of environment, I think it's actually quite favorable for growth assets, meaning the development of the stock market. Why? Because we can see that. Like yesterday, we saw and talked about some of those industrial stocks or raw material stocks that have shown some progress in their financial reports. So it feels like this area should be, quite promising. Talking about durable goods orders, well, there's more progress here too. So we think that the economic recovery is still something we can be hopeful about. In this kind of environment, as long as the economic upturn is still ongoing, actually, it's more like an acceleration rather than just a recovery, to put it that way. The outlook for economic acceleration is looking good. So that's the situation here. It should still be relatively good for stocks. Now, in addition, I want to mention something else. Trump regarding this incident? About this incident, I think today he's continued to try to cool things down. Because this morning, according to the news I saw, there was a clear replacement for this. There was a commander, Bovino. I heard that this person was too radical and too tough, so Homan has taken over his position as acting commander, taking over command. So this should be the case. Did Trump want to de-escalate? Well, I think that Trump should be seeking to de-escalate in this Minnesota incident because there are already too many people opposing him, and the pressure from excessive law enforcement is actually a very obvious sign. So he should be willing to compromise. Also, let me add two pieces of news. The first one is regarding China. The first thing is that after China bought American soybeans, they then turned to Brazilian soybeans, because now it's already January, right? The timing is about right. Since it's winter here in Taiwan now, in the southern hemisphere, it's what you would call spring, right? So yeah, from winter to spring. And their soybeans are almost ready for harvest. So around March or April, they're probably going to start harvesting and getting ready to ship. So they've already placed orders there. Okay, and then on the other hand, Zijin Mining, a company, went and bought a Canadian gold mine. A gold company, actually. So basically, they bought their gold mine. Zijin went and acquired a Canadian gold mining company, and then the U.S. House Select Committee on the Chinese Communist Party paid attention to it. Well, anyway, it's actually kind of funny, you know. So, they say this move expands China's influence. But the thing is, the U.S. itself doesn't get along with Canada. Otherwise, Canada wouldn't even do this kind of thing in principle. Because before this case, Canada's first, Tech Resources, was originally going to sell to China, but then the deal was canceled and they sold to someone else instead. They sold to another company. I think it was a beauty resources company. Anyway, it was still a mining company, just a different buyer. What I really want to say is that Canada's stance used to be totally in line with the US. They were very wary of China. If you can't handle things properly and pull off some shady moves, then of course their attitude will lean more toward China. That's something you handed to them yourself, so you can't really blame China for it. So what's next? Next, let's talk about something important. Today, we're going to discuss sector rotation. How should we look at sector rotation? And what counts as a successful rotation? So here we'll use two indexes. One is the Dow Jones Index, which is more representative of value stocks, especially traditional industries in the US stock market. The other is the Magnificent Seven, which refers to just those 7 major stocks in the market. You can see that we're looking at the cumulative gains since October 1st of last year, so basically from the start of last year's fourth quarter. Actually, during this period, the Dow Jones has outperformed, even outperformed the Magnificent Seven. And you can see this is pretty obvious with the Magnificent Seven. It was only after a sharp drop that started around last week, before mid-January, that we began to see a rebound. What we want to point out is that before that decline happened, everyone seemed to be leaning more toward this side. The performance inside the leading group was relatively good. So how should we look at sector rotation going forward? First of all, this is very important. For rotation to happen, the Magnificent Seven need to pick up the upward momentum from the Dow. In other words, the stocks in the Magnificent Seven sector need to, The stocks in this sector need to maintain the overall upward trend of the market. Actually, the reason why I emphasize the Magnificent Seven is because during certain periods, more than half of the market's performance comes from just these 4 companies. Well, it's not exactly calculated that way, but the main point I want to make is that you should get the idea. As long as more than half of these 7 companies continue to perform in a bullish manner, that's what matters. The entire index is then more likely to maintain a bullish performance, especially since starting from the fourth quarter of last year, traditional stocks have also been performing relatively well. So, what we want to share with everyone is really this concept. This concept will actually become clearer when we look at the Magnificent Seven in a bit. So, the Dow Jones dropped on Tuesday, and the main reason for that, let me explain it as well. Microsoft and Amazon were both going up, right? Both of these are part of the Magnificent Seven. As for Caterpillar, is it still related to electricity? Well, basically, it's also connected to AI. And Johnson & Johnson, that's because of this. Its pharmaceutical portfolio is better than others, so its stock price will go up. But this particular drug is relatively single purpose, not really unique or special. What was more important yesterday was that United Health was dropping. But why is that? Looking at the latest Medicare proposal, surprisingly, there was no increase in premiums. If there's no increase in premiums, then there's no increase in payout amounts either. This caught the health insurance companies off guard, as it means their income might remain flat with no room for growth. In theory, it should rise along with inflation, but surprisingly, no adjustments were made. That's why healthcare stocks are relatively weak. Now, let's talk about Cigna, which is a retail stock, and Boeing, which is considered an industrial stock. American Express is a financial stock. Here, let's talk about the sectors with the largest weightings in the US. For the S&P, first is communication services. Information technology, IT, is still the largest. Then next should be financials as the second largest. So the top 5 biggest sectors are basically information technology, financials. If we look at it in terms of sectors, it's information technology, communication services, and consumer discretionary, because Tesla and Amazon are classified under consumer discretionary. And then there's also healthcare and financials, which have relatively large weightings. The 6th largest is kind of in the middle, which is the industrial sector. So if we look at it, looking at these sectors, if healthcare, let's say United Health for healthcare and American Express for financials, if healthcare weakens, but you still want to keep the overall index moving up, then you'll need to see tech stocks step up. So even though the market closed lower yesterday, you could sense that happening. On another note, let me give a clearer explanation about the Magnificent Seven here. Yesterday was very strong. There was a significant rise. Among all the Magnificent Seven, only Tesla went down. Next, let's take a look at their earnings reports while we're at it. What I want to tell everyone here is whether, during this period, there will be a sustained upward trend. If the other 3 don't experience a major drop during trading, then the overall rally has a better chance. So as we can see, the one most likely to lead the gains is still Google, because today's application is really impressive. Personally, I really like using Gemini services to make purchases, because once you get used to using Google, everything else just falls into place naturally. Now, as for Nvidia, it's very important. It will be the last among them to announce its earnings. It's also been trading sideways in a relatively high range for almost half a year now. So with the stock moving sideways like this, it really needs some positive news to drive an upward trend. If there's no good news and instead something negative comes out, then of course the trend could reverse and go the other way. We're still pretty optimistic here, though, and we hope to see a strong upward move, a big red candlestick heading up. Now, as for Amazon, it's in more of a mid-range consolidation phase. All 3 of these stocks basically have a chance. After this period of consolidation, they could move upward. I think the most crucial factor in whether the market will go up is Tesla. Okay, so Tesla's earnings report will be released on January 29th. That's tonight or early tomorrow morning. This is definitely one of the key stocks among the Magnificent Seven. If Tesla can drive the momentum here, if there's good news and it manages to break out of this $400 to $500 consolidation range, then the outlook for the entire market will be much more optimistic. Now, as for Apple, after its correction, it did rebound. If you look at the area I've marked, it bounced right there, but then it hit the monthly moving average, so there's a wick left on the candlestick. As for Facebook, it's actually consolidating pretty well, showing signs of a bottom forming. But if here, for it to resume an upward trend and really take the lead, there's still some way to go. Let's wait and see how its earnings report comes out tomorrow. The main issue is still whether its investment in AI and the returns from that can convince the market. If there's a reassuring explanation, that would help. As for Microsoft, it's still relatively weak. Its correction doesn't seem to be truly finished yet, so the consolidation hasn't really landed, and the bottom hasn't formed. So let's just take a quick look here. Their earnings will also be released tonight. Finally, let's go ahead and take a look at the Philadelphia Semiconductor Index. As for the SOX index, yesterday's leader was Lion Guan. They make connector cables. It's impressive that a cable maker can lead the market. While similar Taiwan stocks might seem quiet, this is an American company, so it's possible for them. Looking at its momentum, the strength of its stock price is different from that of Taiwanese companies. So here, we still need to explain to everyone that when US stocks are rising, there might be some unique factors at play. So, just to let everyone know, this is a company that provides connectivity that acts as a link. Then there's Global Foundries, which is a foundry specializing in mature process nodes. As for Lam Research, this is, semiconductor equipment, right. They're announcing their earnings today, so we can take a look at that later and see what the pre-market sentiment is. Now, Micron is very important. It went up 5.44% yesterday. Why is it important? I'll explain that in a bit. Then first and second, Qualcomm dropped, and Analog Devices, which had been holding up, also fell. But only these three stocks went down yesterday. So is the overall Philadelphia Semiconductor Index still leaning optimistic? The answer is yes. Why is Micron important? It's very significant. First of all, yesterday there was some positive news about expansion, and the stock did go up in response to that good news. That's a positive sign. What are you usually worried about? When good news doesn't move the stock, or when bad news causes it to drop. But that's not the case with Micron. When there's good news, it performs well. Also, yesterday, Seagate, which is Seagate Technology, the company that makes hard drives, also related to storage, announced its earnings after the market closed, and the results were better than expected. This helped boost other memory-related stocks like WDC and SanDisk. Their pre-market performance was more active as a result. Just wanted to share that with everyone, especially about SanDisk. Yesterday it was down, but I think it might be going up now because of his boost. As for Broadcom, it did rebound, but it's more like Microsoft and Facebook. It still feels like it's lagging behind and needs a bit more time. And even though AMD was down, you can see it's kind of similar. This one, it's more like AMD is more like overall, it's more like Tesla's trend, moving in a big range and fluctuating. So, also, its earnings report comes out a bit earlier. I think it'll be released next week. So for AMD, its performance is also, I think, just waiting for the earnings report. Intel went up yesterday, and there was a relatively positive piece of news about its earnings report. After the earnings were released, the stock didn't go up, but the news was still somewhat positive. Why is that? Because the disappointing earnings report caused the stock to drop sharply, but who stepped in to buy shares at that time? Seeing who bought the stock at that moment's really exciting. I'm talking about insiders here, two people whose actions are really encouraging. The first is the CEO, which shows confidence in the company's management. The second is the CFO, which means there's confidence in the company's finances as well. Yesterday, it was the CFO who stepped in to buy, and I think that's a pretty positive sign, but still. It's definitely a positive sign, but the main thing is still how quickly their fundamentals and technical capabilities can catch up. All right, now, with Nvidia's investment effect continuing to play out, the stock kept rising yesterday. There's a chance that once the bottom is formed, there could be a short-term rally. I still think it's in a bottoming phase, though. The key is that they need to show improved profitability, and then Oracle is still going down, which isn't great. Also, there are a few news items I want to share with everyone today. First, before the market opened, ASML announced that their order volume for the fourth quarter hit a new high. Of course, this is driven by AI, but there's another aspect that's caught the market's attention. That is, first of all, they will no longer disclose order data in the future. I think it's probably because they're worried about the impact from China, so they'll only reveal the total amount, but won't tell you exactly how many orders they've received. Also, they're planning layoffs, about 1,700 people, mainly in the technology and IT departments. So this is a bit intriguing. Will the market react by thinking their orders are doing great and the outlook is good? Or will it respond by questioning, like, hey, why are you laying off people in the finance and tech departments? And then canceling the disclosure of order data? Could it be that they're actually expecting something in the future? It seems like the economic outlook is facing a bit of a headwind, so that's something we need to keep an eye on, because right now we still don't know which part the market will actually react to. So I'm just sharing this news as an update for everyone. Now, as for SoftBank, they've reportedly invested an additional amount in OpenAI, but it's not more than $30 billion. I forgot exactly, but previously SoftBank, maybe it was last year, I can't remember if it was November or December, invested either $25 billion or $50 billion, and now they're planning to put in another $30 billion. That's actually a pretty significant amount. Now, they already hold about 11% of OpenAI. Here, just last month, they invested $22.5 billion. Sorry, I even forgot the number myself while organizing this. $22.5 billion, and now they're possibly going to invest another $30 billion. I think, well, that's really a timely help. But I still think the biggest problem for OpenAI is how exactly they're going to make a profit. Well, I think there are still a lot of changes ahead, and besides that... Oh, right. Wasn't that Maya news from yesterday? Let's take a look. While we're at it, let's also check out the earnings numbers that were released yesterday. Kimberly-Clark didn't do well, so it dropped on Tuesday, and United Health was affected by that Medicare news. It was negatively impacted, so the whole healthcare sector was affected. Except for HCA, which reported good earnings, the rest didn't do well. The airlines didn't perform well. Why? They mentioned that in the fourth quarter last year, the US government shutdown affected their fourth quarter results. But the problem is, as soon as they said that, everyone had a negative outlook. Why? Because right now, the weather in the US is extremely cold, so there have been widespread flight cancellations. So the performance for the first quarter will also be affected, which is why the stock dropped early yesterday. Now, as for Raytheon, their financial report was pretty good, and their sales and profit guidance for 2026 is quite optimistic, so the stock went up. For General Motors, there was news that their profits would increase by $2 billion, so on Tuesday, the stock surged. I can only say again, this is just how it is. The stock price is performing well, but I still wouldn't recommend their cars. Now, as for UPS, their financial report showed good revenue and earnings. However, it's a bit unfortunate that the stock didn't rise much. The main thing is, even though their financials were good, they also announced they might lay off over 10,000 employees, which is something to pay attention to. Recently, we've been seeing layoffs happening one after another, and that's not a good sign. Even though the overall job market is showing low unemployment, we're seeing a situation where companies are both hiring and laying off, but it's clear that big corporations are still carrying out layoffs. The number of people being let go is something worth examining closely, and it'll be interesting to see how this trend develops. As for Northrop Grumman, the defense contractor, their financials didn't meet expectations, so the stock opened lower. However, it ended up closing higher, finishing with gains. 22.69, and then HCA, which I just mentioned, actually went up against the trend by 7.08%. Then there's Nucor, the steel stock. Its revenue and earnings fell short of expectations, so it dropped by 2.3%. So with Boeing, here's the situation. If you look at their cash flow and sales, those have grown well. But the thing is, their revenue and earnings look really good, mainly because they sold off a subsidiary. So that's the reason. It kind of feels a bit like they're trying to make things look better than they are. So on Tuesday, the stock continued to fall. It went down. Then after hours, there were two companies, Texas Instruments and Seagate. As for Texas Instruments, the earnings report wasn't good, but the thing is, their guidance was pretty solid, and the market thinks the downturn has bottomed out and a rebound is starting. After hours, the stock went up about 8.8%. Now, you should know that when Texas Instruments goes up, it tends to drive up a few related sectors, like Supermicro, then Owen Semiconductor, and another one I forgot. Maybe we'll see it in the pre-market and talk about it then. Basically, it's the mature process segment, especially automotive chips, that's seeing a rebound. But I still think we need to watch how long this rebound can actually last in this sector. That's something worth paying attention to, huh? It's something to keep an eye on, because honestly, the rebound in the auto market doesn't really have, in my opinion, that much consensus in terms of market potential. That's a very important factor. If demand in the sector picks up, you'll see it. In its fiscal second quarter of 2026, both revenue and earnings exceeded expectations, and after-hours trading was up more than 10%. So this has driven the performance of the group we just mentioned, like Zhen, Dixi, and Micron. Now, let's take a look. What we need to pay attention to today, Wednesday, is GEV. Alright, Starbucks, then Corning Glass, then General Dynamics, and ServiceNow. As for the ones in red, we didn't specifically organize them, because we already talked about them earlier. Then there's IBM and KLA. So basically, the electric equipment sector has already risen 6% this year, which is really strong. Now, as for Starbucks, you might be thinking, isn't consumer spending in the US supposed to be weak? But did you know it's already up 13.7% this year? Why? Oh, because Trump postponed or actually canceled the coffee tariffs on Brazil. As soon as that was announced, right at the start of the year, it started climbing and went up to 13.7%. This is actually pretty honest and efficient in terms of market reaction. And then, yesterday, Corning Glass went up, a lot actually, and it's already risen more than 25% this year. The main reason is that Facebook is planning to expand its data centers, and Corning is supplying fiber optics. Yesterday, didn't I mention that this might be related to optical communications? Well, it went up as a result. Next, defense stocks like Tongtong Power also rose, mainly because people are looking at its aerospace sector. Their performance and some of their financial figures, ServiceNow hasn't been doing so well. It's down 14% this year. For software stocks, since corporate capital spending is basically a fixed amount, most of it has been redirected to AI investments, so software stocks have actually become unexpected casualties. As for Ericsson, it's also seeing the performance of its software division. There's also the Confluent division and its transactions. On the other hand, KLA's research and development has been even stronger this year. It's already up nearly 40%. We've also released another report mentioning that TSMC, besides launching that new process, might be pushing CoPoS next. So upstream semiconductor equipment has been performing extremely well lately. KLA, Lam Research, and basically any advanced process equipment companies that are more upstream have all been performing really strongly. The S&P was up yesterday, so we'll just quickly go over that here. The equal weight index was down though, but mainly let's take a look at the pre-market. It looks like, based on the numbers a little after 6, things are looking pretty good, with the market generally trending upward. Now let's switch over to the main screen and take a look at the overall situation. Looking at the market's performance here, we can still see tech stocks are still really strong. In a moment, when you look at the individual stock performance, you'll see proof of just how strong the tech sector is. With tech stocks doing well, it's no surprise that the S&P is also strong. The Dow is a bit weaker, but that's not unexpected either. It's just the effect of funds being shifted around. Alright, so the most important thing is to look at how individual stocks are performing. Seagate had a good earnings report, so did you see that? The stock itself, after hours, it went up 18%, and during regular trading it rose 10%. Looks like it's going to have a pretty positive performance at the open. FF4 is F5, which is an information services company, so it went up quite a bit. As for Seagate, actually, WDC, Western Digital, was pulled up by Seagate. And did you see Spire? This one had pretty good expectations, so it went up 7%. As for Texas Instruments, that was also lifted by its earnings report, which in turn drove up Supermicro. Then, on the other hand, ST Micro was dragged down, but Intel also went up. On Semiconductor was also lifted by Texas Instruments, and NXP performed well too. Micron also did well. Analog devices, right? And there's another one. Analog devices also mentioned mature meaning the automotive chip segment, the analog IC part. And then KLA and Applied Materials also performed quite well. Looking at it, actually, among the top 20 or 25, most of them had gains of over 1%. You can really sense that tech stocks are making a comeback, and there's a clear rotation happening. This is pretty obvious. Now, as for the declining stocks, Unfino actually reported pretty good earnings, but the problem is, it seems like the market just isn't buying it. Maybe there are some details that aren't so great. And then there's Skyworks, which dropped 11.01%. The reason for that is they didn't release an earnings report, so why did the stock drop so much? I specifically looked into it, and it's because they lost a lawsuit against a Chinese company. Since they lost, they're probably going to have to pay damages, so that's why the drop was so significant. Also, something else that's a bit odd today, because I was just checking before starting the stream. This particular stock didn't drop that much at first, but as soon as I checked online just now, the decline had widened. ODP did release an earnings report, and it wasn't very good. MH, that's Molina Healthcare, continued to be affected by that yesterday. Alright, next, Common Glass went up too much yesterday, so now it's giving back some of those gains. Then ADP released its earnings report, and Steel Dynamics reported earnings the day before yesterday, which didn't look good. Then Pittsburgh Industries also released earnings, and those weren't good either. GEV had an unexpected drop. Yeah, it was a profit miss. Then the wind segment, that is wind power, did not do well. Its revenue and earnings actually came in below expectations. This was pretty surprising because in theory, the power sector is doing really well. So it is odd that this part underperformed. That is why it dropped quite a bit, almost 2%, which is relatively weak. Alright, that's for the individual stocks. Now, as for the US dollar, it's rebounding, but honestly, I think at most it's just a change in the slope. It's not really that great. And pay attention here, let me just say this. If the US dollar is falling, but US stocks keep going up, that means capital is flowing out, and the pressure is pretty high. Once that outflow builds up to a certain level, it will start to impact the stock market. Yeah. So US Treasury bonds continue to decline. As for economic data, today only the MBA mortgage applications index was released, and it dropped again. Honestly, you can just use this as a reference for the housing market. Next, gold and silver are still very strong. So let's move on and take a look at everyone's questions. All right, Anna, you are being so incredibly punctual today. Some of your classmates are really encouraging you, so please keep up the great work. Quitting smoking? I actually stopped smoking a long time ago. I quit because of allergies. So Trump supports a weaker dollar, lower interest rates, and rising yields on US Treasury bonds, saying that rising interest rates are inevitable. But that's not necessarily the case. Actually, the main reason people are nervous about rising US Treasury yields right now is really the overall debt issue. The yield can't be allowed to jump too high. If it jumps too high and starts affecting the primary market interest rates, it would actually be detrimental to the long-term financial stability of the US. This would result in a weaker situation for both the Taiwan and US stock markets. Yeah. Should we be worried about a weaker dollar when it comes to the Taiwan stock market? I think this is something to consider. Good question. So, as for your question, honestly, I really can't say. I can't answer it properly. You know, it's a bit awkward on a public broadcast like this. But my suggestion is you should go and check it out yourself, I think. Whether it's shipping or other sectors, will it be related to bulk shipping? Right, the simplest way to look at it is that the shipping industry actually reflects the overall volume of international trade. But there's something to watch out for in the short term. When are we celebrating the Lunar New Year? It's around mid-February, right? This year, the New Year's a bit later. So around the New Year period, you know that exports from China, it's the same for Taiwan, but you have to be careful. During this period, no one wants to export, so there really is an off-season, so you might want to pay attention to this. Now, as for bulk shipping, it's mainly about transporting dry goods. The strongest sector right now is basic metals. If you look at basic metals, you can pretty much tell that recently Taiwan's bulk shipping hasn't really performed yet. But the first thing you need to look at is the international price of dry goods, like metals. And don't underestimate agricultural products either. The prices of agricultural products actually depend a lot on the weather. If the weather fluctuates even a little, prices can shoot up, and the impact is actually pretty strong. So if you want to keep an eye on things, just watch these factors and you'll be able to see what's going on. That's basically it. As we just mentioned, we invited Tongle. Yeah, we just talked to everyone about this. When prices go up too much, the actual manufacturers start to grumble a bit, and you can sense that they're kind of wanting to just give up and lie flat. So what we're telling everyone is that you need to keep an eye on this, observe it a bit. I think in the short term, the things that will react more are probably those categories that reflect anxiety or unease. Those are likely to perform better. And that's pretty much how it is. All right, let's take another look. If there are no other questions, we'll wrap up here for today. Tomorrow is, of course, very important. First, we'll see what the Fed chair has to say, and then we'll check out the earnings reports from the so-called Magnificent Seven. as I just mentioned, these 7 giants actually still have an impact on the Taiwan stock market. Alright, so let's take a look at how the Taiwan stock market and the T-giants perform when their results come out. If the parts that the market is worried about can be eased, then the market will continue to be strong. Okay, so we'll stop here for today, and I'll see you all tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.